Hey everyone, it is Evan here from the Trade Risk on Friday, April 24th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. Now, before we jump into the analysis this week, I do want to make an announcement, and a big change is coming to the format of this video series. So we've been doing these market recap videos for about 7 years now, and we've recorded over 500 of them, and not a whole lot has changed in the format, in the symbols, the tickers, the data that we're looking at. And I think we can do a lot more, a lot better of a job, looking at some more interesting areas of the market, incorporating market breadth, and just a whole lot more. So starting this week, you're going to see some changes to the back half of this video. The charts and the format in which we display some of our analysis is going to be different. And I'm welcoming your feedback, especially if you've been watching these videos for a number of months or years even. I would love to hear any suggestions, comments, for better or for worse on where we go with this new direction. But for the next month, we are going to be sort of experimenting with some different formats and some different views to get our sort of best thoughts out there on the market and to prepare us for the week going ahead. So that is ultimately going to remain the same goal, but we are going to be experimenting with some different things. So bear with us over the next month or so. Hopefully these are changes for the better. I think you're really going to like next week's video. For instance, we are no longer going to start with this view here. We are sort of rebooting the look and feel of our market dashboard here. We're going to get a little more in-depth at what went on during the week, and we're going to sort of do away with this current view here, and then on the back half, we're going to change some of the way we present charts. So lots of changes. Again, love to hear any feedback as we progress through this. You're going to see a lot of changes over the next few weeks. So this is our first kickoff of our kind of legacy dashboard here. So let's jump into it. And the second half of this video, you'll see some of the changes that we're going to be experimenting with. So if we look here now at the market as a whole this week, was pretty mixed. Most of the major indices closing negative here. The Russell 2000 enjoying a little bit of outperformance this week, but it was a pretty flat, choppy, sideways week for the major U.S. indices. You can see we are back above the 10 SMA across the board, starting to reclaim some of the 50-period simple moving averages, and the Qs still above the 200 as well, so above all three of them heading into the close of the weekend. If we scroll down and take a look at sectors here, not as impressive. You can see XLE, biotech, top of the list, only green sectors right now, energy and biotech. Semiconductors nearly green, but still closed the week in slightly negative territory over the past 5 trading sessions. And on the downside, utility staples and industrials all suffering here, down about 3 to 3.5% to the downside over the past 5 trading sessions. Now, in terms of major markets, gold getting the biggest lift here, 2.5%, followed by TLT and the dollar. And on the downside, oil continues to suffer here. USO down 38%, followed by volatility and high yield credit also underperforming on a relative basis. So let's jump into a new top level view of the markets here, and this is where we think we're going to start our analysis going forward in the weekly charts. And this looks a little busy, so let's try and explain and break down what we're looking at here. We're going to start in the top left corner, and we're going to work our way down to the bottom right chart, but the top left is the S&P 500 on a weekly time frame, and the white dotted line that you see on this chart is price itself. And the circles that you see, the green, yellow, and red dots, that is a simple trend filter applied. And it's basically going to be a very easy visual representation of kind of the dominant trend or the bias for a particular market on a particular time frame. And I think this is going to help at least just clarify and show the difference and discrepancies of strength and relative strength at a glance. So basically here, when we look at the S&P 500, you can see we are below a downward sloping trend here. Again, this is a weekly time frame, and we've nearly made it all the way. So this big bounce that we've seen off the lows, we've made it almost back to kind of retesting where this downtrend line is coming in. You can start to see that we're pulling off just slightly here this week. If we zoom in, you can see we're starting to pull off just a little bit. We closed down about 1% this week, and this sets, again, the bias, the tone that, you know, if you're looking over a longer term time horizon, say multiple months to a year, you can see that the market is still in a vulnerable, dangerous spot right now for the S&P 500. Now compare that to the top right where we have the NASDAQ 100, same weekly chart. Notice here the bounce has been more aggressive, and on a relative basis just didn't suffer as much as the S&P 500. Notice we are now back above our simple trend filter here, and it's turned yellow, which is basically a transition mode where it still basically is telling us, you know, all is not clear just yet. There's still some mixed signals, but overall you can see the NASDAQ on the weekly chart just performing much better. Down here on the bottom left, Russell 2000 now, if we look here, you can see, again, still got a good amount of distance between the downtrend line and where price is. So this on a relative basis is certainly underperforming. And on the bottom right is a new introduction here. This is ACWX, which is the world stock market or world equity markets minus the United States. So it's basically saying, what does the rest of the world look like if we don't look at the United States, minus the US? And you can see that basically if you were to compare this ACWX versus everything else, it's almost the worst performer here. So the world really doesn't look any better out there outside of the US right now than any of these other majors. So if we go down to a daily chart now of some of these charts and we take a look at some of these markets on a daily time frame, you can see things are definitely different because we have seen on the daily chart our trend filter has transitioned, and we've been in sort of a you know, a rally mode here for some time. The transition really started back on the 6th of April if you're looking at a daily chart. So approximately now we're looking at a trend filter of about 1 month. But, you know, if we were to essentially look at this view, you can see that the buyers have been in control here. And that does make sense because we have enjoyed a nice rally off of the lows. So if we look here at the S&P 500, you can see we are still above this rising daily trend here. And until this starts to really roll over, we might be able to continue in this trend and continue in this higher lows and higher highs pattern you know, for the foreseeable future. We're going to dive more into just our traditional price action analysis later in this video. So we're going to talk more about the specific levels we want to pay attention to here. But generally, you can see the trend has been up. NASDAQ, same thing here. You can see also nice, healthy kind of transition. Was one of the first to transition up and has been in this bounce mode. Look at the IWM here. You can actually tell by the distance of these dots on how close they are to one another. So it's been a little bit more reluctant to turn up. It's a later transition, and you can see price is just above this signal here. So this is going to be an important one to pay attention to next week around that 117 level. Last but not least is ACWX down here as well. You can see still got that bullish trend going on, but still like the IWM is closest to transitioning lower. So we're going to talk about all these a little bit more at the end of this after we go through a little more of our trend views here. If we take a look at another set of instruments here, so basically we're not going to go too in depth into all of these. We got credit markets at the top of the list here on a weekly time frame. So basically credit markets, good indication, good, you know, potential smart money forward indication there of what credit's doing versus equities. Sometimes you can get some nice leading signals there, and generally they're a little more sensitive to you know, future pain or you know, equity equity market influences. You can see the investment grade credit over here, LQD, is back above. So this is the better acting or the higher quality debt market, is in a good position here. It's back into green territory. That's actually a very encouraging sign. However, if you look at the top right, this is the high yield market. So this is junk credit. So it'd be the more speculative debt out there. And notice it was down 3.5% this week. This is actually a pretty good size move for JNK. It's still got bear trend going on here and it's starting to pull off of it. This here is something we definitely want to pay attention to. Does not bode well going forward if you're looking at something like the JNK. Now, bottom left, we have volatility. So you can see VIX has basically been in this nice uptrend, has been in a buy signal since early February, continues to hang out above there, and that's acting well. And then TLT, you can see as well, just in a strong uptrend, closing at highs here, very strong, lots to like there on the weekly time frame. Here's your daily views on everything. We're not going to go too in depth here, but basically you can see both got that positive trend going in the credit markets. VIX has been in a sell signal here on the daily for some time. TLT also in alignment with that bullish signal. Finally, if we look at commodities, commodities here, you can see gold top left. Basically a nice bullish signal there, so weekly time frame. So you can see gold just acting real well there. Silver, totally different story, right? And this really, this view cleans up the pictures here quite a bit when we dive into the candlestick analysis with lots of levels drawn all over the chart. It can really mask what's going on at a bigger picture. And here you can clearly see that silver is in a much different picture than gold is right now. We got a bear trend going on, price below it, nothing good there. Oil bottom left, this looks horrendous. DBC looking for a better commodities ETF than this going forward, but you can also see heavily weighted on the oil, looking pretty ugly there as well. Now, if we go to our sector view here, this is going to be a very busy view, but basically we just want to look at a glance what sectors are standing out. And basically here we can see transitioning is technology in the top left here. You can see is moving more sideways, trying to reclaim that trend. Same thing with semiconductors. Everything else though in the red until you get down to biotech, which is I think is an important one to watch. The IBB has moved into a green positive trend filter here. It's the first of the major indexes, or the major sectors, I should say, to move into a green buy signal here on from a trend perspective is IBB. So pay attention to that. Second is XLV. This also went green here this week. Pretty much go hand in hand, but basically seeing a lot of strength there. Utilities negative, staples in the yellow as well. So that's a big tour around some of the bigger markets there in terms of in terms of those trend cycles. Hopefully that helps clean things up. If we were to get a little deeper now and we look at some of the price action in the S&P 500, this has been the roadmap we've been watching, this kind of two-legged move up, getting back up towards this gap. You can see we've essentially now gone sideways, and what we've seen here now in the S&P 500 is one of the longest, in fact it is now the longest sideways consolidation since we bottomed out here on the 23rd of March. So we bottomed out, we have enjoyed this nice rally, and now just take a look at how much time we're spending going sideways here. So we are fueling up for a potential volatility expansion event. Right now, the trend again is up. We have higher highs and higher lows on this shorter term daily time frame. So that is the dominant move here, but we'll see if we can get that upside follow through next week. We've got a good sideways base to pay attention to. So let's measure effectively from 2720 all the way up to about 2880 or so. That's essentially the range that we've been in here over the past week and a half, 2 weeks of trading. So we should pay attention to that. Volume has slowed down as well in this range. So I think we're getting ready for a little bit of a deciding factor here. And it does come with earnings season, which is really going to get pretty busy next week. We have lots of the high higher beta companies, mega cap companies that have basically really helped fuel this market to the upside. They're the ones reporting next week, so or a lot of them are. So we definitely will have some catalysts and headlines to digest next week. Now, if we were to look at this weekly chart real quick, I also wanted to just point out here, we got an inside week that we printed this week. So basically we traded entirely within last week's range. And if we were to go to the IWM here, again, this shows, almost back-to-back inside weeks here. In fact, let's see, the 124.88. So not quite back-to-back inside weeks, but nearly so, which basically, again, just says things are compressed right now. And if we go down to that daily chart, you can see just how much sideways chop we've seen here in the IWM. And it does look, again, to be fueled up for some type of move. You can see volume has been drying up in this range here. So be very interesting, heading into next week, busy earnings season, to see how a lot of these markets react. Russell 2000 again has been the weakest. This 117 area is going to be awfully important. If we were to look at this view here of it, you can see this is basically right where that trend filter comes in on the daily chart. You can see it's the bottom end of the recent range, top end of the higher high that we broke out from back in the end of March. So about this 116 to 117 range, that's going to be an important one to pay attention to. Last but not least, if we look at the NASDAQ 100 here, we'll switch over to this view. You can see this has slowed down a little bit as well this week, but continues to hold up, has the bullish trend at its back here, still riding a potential kind of channel higher here, and it has certainly retraced the most out of the major indices. And again, we'll have a lot of these companies reporting next week, so we'll have some interesting insight into just how, just to see where this market has traded before these companies report, see if we've got ahead of ourselves at all. But the NASDAQ 100 is going to be important to pay attention to as well. Effectively, the Tuesday sell-off that we saw this week, I think the lows from Tuesday are good risk levels to pay attention to from a price action perspective right across the board. If we start losing Tuesday's lows, then I think that certainly opens us up to more risk to the downside. But until and if that happens, again, let's respect the trends, play within our time frames, and manage risk accordingly. So two sectors I want to highlight just at the end of this. First is XLE. So XLE has been, of course, the underperformer this week. The story this week was oil. We spent some time on the midweek video on Tuesday discussing oil and the blow up that basically happened earlier this week with the front futures contract, the May contract, trading negative into basically into delivery, into expiration. We've since seen a little bit of recovery in oil, but the interesting thing is that the companies themselves, XLE, while the commodity has been totally imploded with no demand in sight whatsoever, companies haven't seemed to flinch all that much just yet. In fact, you can see the XLE on the week was still up 2% despite a very historic week in the underlying commodity that a lot of these companies are effectively their businesses are built off of. Now, of course, you've got different types of businesses. You've got producers, you've got storers, you've got refiners. So lots of these companies and the price of oil impact them in different ways. But the story is XLE has continued to hold up, but it is coming into some pretty interesting resistance here again, just in the fact that it already now has rallied approximately 48% off lows, 50% off lows. Seeing a lot of traders now start to realize the XLE is holding up quite well here. It's coming back into a gap. It's coming back into resistance. So I would be cautious here in XLE as we approach kind of the upper level, risk range or resistance range that we can see here. And again, it's still in an uptrend for now, but let's pay attention to a pretty tight trend line here. If we start rolling over from this area, I'd be a little cautious there in XLE. Now, IBB is the last thing we're going to look at here in today's video. This, remember, is the first sector to go on a weekly buy signal here if we were to look at our trend filter. So if we were to put this on here, you can see the trend filter went positive here. You can see IBB working on a breakout right now above this recent resistance. And if we zoom out even further, you can see just how great this breakout looks if it can stick. Now, it's had a big move to the upside, so it's basically gone up 35% in a straight line. So you do have to be cautious there on the breakout, but nonetheless, if we can continue to maintain over, call it $123 or so, IBB looks pretty poised here to continue to lead and help move this market higher. So something to pay attention to. Again, it's not without risk. The fact that it has ran so much is certainly something to keep an eye on and be mindful of. But IBB certainly the strongest sector out there. So that is it. That is the recap here. This is a phase kind of one of a transition here. Let me know if in the comments, or you can write us an email, you can write a comment on the YouTube channel or on Twitter. What do you think of these trend filters? Does this help smooth out the action? Is this value add? Let us know sort of your thoughts here on just some of the the new updates on some of the analysis here. The big change next week, I think, will be on the intro and how we open up these videos and really set the stage, which I'm really excited to share with everyone because I think it's going to be a great way to, recap what's going on and just better understand what's going on moving forward. So in next Friday's video, we should have that new intro out and kind of phase two of this market recap update for you guys. So that's it from me. Thanks so much, as always, for tuning in. All 500 plus videos that we've done. Thanks so much for watching and supporting. Have a great weekend. Thanks so much. We'll be back on Tuesday next week.